In this video, research on the Ethereum layer 2 landscape. This is very clearly one of the main narratives as we push into the next bull market. And so we're going to look at what these networks are doing right now in terms of how many users do they have, what are the applications building on here, and how are they going to perform over the next few years in Ethereum terms. We're going to look at all of these networks, and I will leave timestamps for the networks and all of the research down in the description. The first network we'll look at doesn't have a token right now, but no token means a potential airdrop in the future. Maybe this will come, maybe it won't, because there is actually already a token for this project, which is Loopring. So Loopring was one of the first layer 2s on Ethereum, if not the first. It was application specific, meaning Loopring is a decentralized exchange. So you need to download the Loopring wallet, get some assets into there, and then you can use the exchange. Now, obviously, application specific is a lot smaller use case than a general purpose blockchain, which can be used by multiple applications. So the Loopring team is developing Taiko, which is what they call a type 1 zkEVM. So we won't get too much into detail on what the different rollups are, but essentially there are different types of rollups with different pros and cons. A type 1 zkEVM gives you a almost identical development environment to the Ethereum blockchain. And so applications can be very easily copy and pasted over to these networks. Some of the downsides is that it inherits some of the large proving that Ethereum has to do on the base layer as well. So there are pros and cons to everything. But really what we're going to focus on is, what applications can be built and how can they grow the user base in this video. Because I think that's the most important thing really from a investment standpoint. So Loopring and Taiko are probably smaller overall in terms of what they're doing, the potential market size. Essentially, all of these layer 2s are a development team that has an amount of money invested in them, and they need to build applications that are of some use. So for me, it doesn't really look like Taiko is attracting the biggest applications that are currently on Ethereum. So Uniswap, Aave, Compound, those big applications don't really seem to be going over to this network too much. And so this network seems to be a lot more developing their own applications. We can see here, these are essentially their own applications that they're building for end users in some way. So for me, a much smaller type of network, but something that is important to happen for this team because Loopring is just an exchange. So a zkEVM, something that can be developed on. Will they develop applications that really make it big? I mostly doubt it, but as you can see, a layer 2 investment is really an investment in a team of people that can develop applications that are used in some way. And I think that's the main thing. If the applications are really big and have a massive use case, I think the investment case is much better for that type of token. Next up, a network that launched just yesterday, although the token's been around for a while. This is Mantle network, which is using 2 pieces of Ethereum infrastructure to create a layer 2. So what are you actually investing in if you buy the Mantle token? It used to be called the BitDAO token being Bybit or Miranda Ventures token. So there is an amount of money in here, and you're really investing in a siloed project and a siloed amount of capital that can invest in applications. So I don't think Mantle token is investing in any piece of really important infrastructure. That infrastructure is coming here that they're actually using themselves. But what the infrastructure is allowed to happen now is essentially competitive projects on top of Ethereum that can then develop applications. And so what you're really investing in here, I think, is a siloed project that is building applications, funding developers and development, and trying to build out applications that can become successful over time. So what we can see here is the applications built on this network already. There are some DeFi applications. Again, none of them are like major applications. The major Ethereum dApps are going to be using Arbitrum and Optimism. They're not going to be using Mantle. They don't need the infrastructure. So this is an investment in, can Miranda Ventures or Mantle themselves invest and actually build brand new applications that have some sort of use case. You can see here there's actually a lot of games on here as well. Again, not massively popular games, but they have an ecosystem fund of around 200 million. So they're going to be pouring that into applications that they hope become somewhat successful, and that would go back to the token. So the ecosystem fund, $200 million here that they're going to be pumping into developers to build out applications. I think it's much more risky in terms of an investment than an infrastructure layer like Ethereum or Optimism. But these layer 2s now have the infrastructure there to then concentrate themselves on app development and investing in that rather than trying to build out the infrastructure, which is beneficial for these networks. Now we'll come to zkSync, which is a network with a ton of hype right now. And that is really mainly because of this, which is, a potential airdrop. So zkSync have hinted or basically said outright, there will be a token and there's going to be an airdrop, so farm the hell out of this network. That's one way to bootstrap liquidity. However, is that liquidity going to be sticky there when the airdrop happens, or once the airdrop happens, are people just going to pull out to somewhere else? We actually don't know that. However, what we can see now is, as of right now, this is one of the, or if not the largest zk network. So zk rollups, a lot of people moving to that, Polygon doing that as well. We'll get to that in the Polygon section, but a potential airdrop here is really creating a lot of liquidity in their system. So $200 million is TVL right now on zkSync era. If we compare that to Polygon, zk EVM, you got 32 million only on Polygon. However, Polygon still has the proof of stake chain. And so Polygon's TVL is much higher overall. But as we can see, the zk EVM really is a new invention that's going to be coming through the next bull cycle in terms of can these networks perform and reduce fees substantially. zk EVM on Polygon doesn't have as much TVL, but there hasn't been any talk of an airdrop here. And so the incentive to move tokens, if you're going to move them, is to zkSync era. One of the downsides here for zkSync is that if you look at the applications here, none of the major apps have really launched on this yet. And the major apps have a lot of stickiness with users. Brand is really important, especially when you're using these applications with so many rug pulls and hacks and everything. And so none of the big applications have really launched on this yet, although they may do in the future. So what I would say is that these applications are proof of concept applications. You've got lending protocols and DEXs, a bunch of them as well. So they can't all be popular. However, the TVL here is decent, but I think it is because of the airdrop farming. What we can see as well is that zkSync is an active member of the Ethereum community and project. So they're at EthCC right now. Having a layer 2 network where you can develop low cost applications is important. And it's definitely one of the major networks, especially with ZK Tech. Now, whether the real major brands are going to choose this or not is still an open question. They may go for Polygon because of the brand and the kind of bigness of the brand and what they're doing there. But zkSync could have a very decent future for a lot of applications as well. What I would say is, you can see the ecosystem here. There's a lot of big names that they're name dropping here, but none of these have deployed on zkSync era yet. You can see what's live on era is, unknown applications, right? So, maybe zkSync can, not be maybe a major player, but maybe top 80 or 100 when the token lists is a definite possibility. What I would also say here is that what we're really looking at is these networks. I think now that regulation is really coming into place, they have to be for large scale vendors. Are banks and other large institutions going to use zkSync? Are they going to use Polygon? That's really important because the lending protocols and the DEXs have been invented already, right? Uniswap and Aave, they're going to continue being the most dominant. Who is going to develop for the regulated entities and who are they going to use? Are they going to use zkSync? Are they going to use Polygon? Because whoever those entities use when tokenization happens are going to be the large winners. Can zkSync be part of that mix? Maybe. I don't think just developing copy applications and some not well-known applications is really going to make it big. But zkSync is an important technology. It's definitely part of the ecosystem. And if you can farm the airdrop, that's just really the next step if you want to get involved. Let's move on to Optimism, which in my opinion is a completely different type of investment than everything that we've just seen. Now, yes, you can make the argument that zkSync and Taiko, they are building infrastructure layers as well with zkSync. However, Optimism is very, very different. It's much more of a direct part of the Ethereum stack. And what's happening here is that Optimism is basically an open source way where vendors can use this tech stack to develop L2s. So Optimism is almost like network to network or business to business, where it says, here is a bunch of open source, credibly neutral layers that you can use to clear transactions down to Ethereum and bundle them up. And that's important because end user layers like Binance or Mantle or Coinbase with Base, what they want to focus on and spend their money on is application development. So bringing the best applications to end users. And they can't really focus a lot on building out infrastructure layers on Ethereum. Optimism is a DAO and a community that does that. So what you're going to be seeing is these networks charging end users a fee and obviously trying to take some profit out of that. But each one of those fees and transactions, Optimism and the Optimism DAO will take a little bit of that as well. And so really the investment case here is, do you want to invest in a piece of the infrastructure layer on Ethereum that is allowing other L2s to build? This is actually a really important part of the Ethereum stack, in my opinion. So what we can see with Optimism is, yes, you can add Optimism to MetaMask directly and use it directly if you want, but you can see that big names are using this now, right? So even Binance are creating OPBNB, which is going to be a new network. You can see Coinbase building Base out, even Mantle are using this, and even CeeLo, which was an alternative layer 1, is essentially scrapping that and moving back to Ethereum. Why would they want to do that? The security of Ethereum is where the liquidity is, right? People do not want to take their liquidity out of the Ethereum ecosystem and put it some alt L1. They don't really want to do that. It's not ideal. And so now what you have is the layer 2 networks can focus on what they're good at, and they can build a layer 2. Now users say that's great because I have my assets on Ethereum and I can bring them down to the base layer if I want. And so this is a, just a maturation of the industry where you have Optimism now saying, if you're a layer 2 or if you're an end user type of project, then you can just focus on building those applications and you can be an L2 on Ethereum. So this is why I believe that the next bull run, you're going to see, L2s proliferate. So what we can see here is that OP has a stack, essentially just technology that allows end users to build layer 2 networks, or for, as you can see here, super chains, which are essentially permissioned blockchains. There's going to be obviously hundreds of different types of infrastructure that can be used for different use cases. So OP Stack is primarily focused around the creation of a shared, high quality and fully open source system for creating new L2 blockchains. The key difference with Optimism for me is that they are at least trying to become some sort of neutral layer. And so the way that the token works is that it's going to be earning profits from the vendors that it services, but then the ownership structure is trying to be decentralized. And so each of the token holders has a say in, where money is spent or if it's spent and what new infrastructure is built. So I think neutral networks win most of the time. And as we can see here, what you see is most of the large applications on Ethereum have deployed on here already. So you've got Curve and Uniswap and Aave and Beefy. Velodrome is a native DEX, which is very, very successful on the Optimism chain as well. You have $1 billion in TVL, which is one of the highest of all chains, and then active users around 92,000. Now, Arbitrum has, I think, slightly more active users. However, I think Optimism's real unique kind of part of the action here is the fact that Optimism is being used by some of the largest vendors in the entire space. Coinbase is building on it. Binance is building on it. And that, I think, shows you that they're confident that, this is more of an open source type of decentralized network stack rather than something like zkSync, which does feel a little bit more closed off. Optimism may have a lot of longevity in this space, which is important if you're an investor, because what I believe they're trying to do is build out a credibly neutral structure that benefits all the different stakeholders, right? So Binance and Coinbase are both using this same technology in order to build out new layer 2s. And I think you should take note because they are the two gorillas in crypto. There's no one bigger than Binance and Coinbase in terms of what they're doing, the money they're pouring in. Why are Binance using this? This is a direct layer 2 on Ethereum, and obviously they want to compete in that space. So OPBNB is going to be this, so a new chain with BNB still as the token that people pay gas with. But as we can see, the transaction cost on OPBNB, which is using the OP stack, much cheaper than BNB chain, block time a lot faster as well. Now with the OP stack, you can obviously change these limits around a little bit. So it's an infrastructure that can be used, but it's not the same for every single chain. You might be able to change things around a little bit. Binance have gone for cheap and fast, which is what they're known for, but you can still use the BNB token to pay for gas. However, with the OP stack, eventually that does have to be switched into Ethereum to pay for gas on the OP or on the Ethereum network anyway, but that doesn't really matter from an investment perspective. So this is important because you have the security of Ethereum. People know that Ethereum is the base layer as that, settlement layer. There is competition in this space, and Optimism is simply, something that these vendors can use because they believe it's neutral, and so they can use it, rather than you're never going to get Binance using zkSync, right? Because they're competitors. OP is neutral, and I think those type of networks eventually grow larger because vendors want to use neutral infrastructure, which is why Bitcoin and Ethereum are worth so much. In terms of the price as well, we'll get to that later, but it's up 133% on the year. It hasn't even had a dump. It's actually up from when it launched in terms of price. 6 billion fully diluted valuation, I don't believe is too high either, although there is a lot of circulating supply left to come out as incentives and everything like that. But it looks to be an important part of Ethereum infrastructure going forward. And so if you're a long-term investor, maybe one to look at. I want to slide in at this point because I am updating my crypto investor course over the next few weeks. I haven't updated this since February. I'm going to be coming with a lot of research on these L2s. Also the Bitcoin halving, it's coming up within about 8 months. It's very, very important. So we need to be aware of this. I update this for free for existing users. It's going to be 6-7 videos of my latest research, my portfolio, all my trades, and also the latest research on Bitcoin, ETH, some other L1 chains, and also what is happening in the macroeconomic cycle right now. If you want to get in before I update it, which does come for free for existing users, link below. You can check out all of the videos here, the Discord private groups and everything like that. So check that out if you're interested. Let's come to Arbitrum then, which is probably the most successful layer 2 as of right now in terms of TVL and users. What is the difference here between Arbitrum and Optimism? I think there's a big difference, and there's one word that can show this, which is proprietary, right? So whereas the OP stack seems to be way more open source and looking to be neutral for a lot of different vendors to build their own networks, Arbitrum very specifically is we have some proprietary technologies and we have a capitalistic framework of incentives to drive that forward and to drive innovation for us. So very, very different from a token investment standpoint. So Arbitrum 1 and Nova, as you can see, are powered by Nitro, which is their proprietary blockchain network powered technology stack. Proprietary for Arbitrum. Optimism seems to be going for much more of a neutral type of network where other users can use that technology in an open source way without having to pay Arbitrum or without having to worry about legal battles or anything like that in the future. Very, very different type of network, and they can both be successful, but definitely different types of investment. How does Arbitrum make money? Very simply, they just charge their users more in gas than it costs them to clear to Ethereum. So if you're paying gas on Arbitrum, Arbitrum is very cheap to use, but obviously for every $100 that they charge their users, maybe it costs them $80 to clear it to Ethereum. So they're just making money from ETH because you pay ETH in transaction fees. They're making a certain amount per year in ETH as profits, and that ETH goes to the Arbitrum DAO. So that Arbitrum DAO can then vote to either return that ETH to investors or invest in more infrastructure, invest in more applications, etc. So I think the massive fundamental difference between Arbitrum and Optimism is capitalistic framework, proprietary technology stack for Arbitrum. Optimism seems to be going for more of, hey, look, this is open source and we're going to work with you, and that's going to be better for vendors, whereas Arbitrum much better for maybe end users and more specifically kind of going after that. The difference between them is stark though in terms of valuations. Arbitrum is worth 13 billion fully diluted. This is not a cheap coin. This is very highly valued. This is actually the most expensive layer 2 network by far. It's double what Polygon is. It's double what Optimism is from a fully diluted basis. Now, why is that? Maybe because it's directly going to the end user. Maybe retail users are more familiar with it. Maybe it's easier to understand because it's going to that part of the market. Maybe other reasons as well. But you can see Optimism and Arbitrum really are the two sides of things, right? So you have Ethereum, and Ethereum developers said, how can we scale this layer 2? We need two different options. We need the capitalist side of things where you let Arbitrum have this proprietary network and they can be incentivized through that. And then we need to get the most amount of users possible, we need an open source part as well that other vendors can use. And so ultimately Ethereum have, I believe, chosen very wisely here to have both Arbitrum and Optimism, which are fundamentally different in terms of who is the end user. and two different incentive structures. Both can win. Arbitrum is winning right now, but Optimism may win in the future if it's got Coinbase and Binance both building on it, and they have the most users. So very interesting to see that competition between Arbitrum and Optimism. Both can be very successful, and Arbitrum is actually earning a lot of money right now in terms of what it's charging users versus what it pays to clear those transactions on the Ethereum base layer. Let's move on to Polygon, which is the highest up in the market cap rankings, although it is not the highest value token. Arbitrum fully diluted valuations, 13 billion. Polygon fully diluted is around 7 billion. So fully diluted, I think, matters long-term, but short-term, especially with bull cycles and narratives, kind of doesn't make that much difference overall, in my opinion. But, you know, it does make a lot of difference to have so much token supply potentially coming out of Arbitrum as well. But Polygon have built use cases for their blockchain that no one else has. Really the only blockchain to actually try and use blockchain tech in the real world with real world users that aren't crypto users. If you look at Arbitrum, all of those applications are just crypto native stuff. Where you look at Polygon, you know, it's doing the NFTs with Starbucks, it's doing Reddit NFTs, it's doing payments with Stripe, it's doing .swoosh with Nike. There are big partnerships here. Now, a lot of that hype was great for the token. It's come off a little bit recently, but that's because they've essentially changed the whole entire network stack that they're using. So Polygon was the side chain, the Polygon proof of stake chain, and it was cheap and it was permissioned. They've changed all of this now, and now they're moving all of that to the Polygon zkEVM. This is a real layer 2 network on top of Ethereum. So you can have your assets on ETH, you can bridge them up and down and be safe with that. And it's not bridging them over to this permissioned side chain, which, you know, you can't really use long term. So in terms of the total value locked, 32 million is nothing. But the zkEVM is very small, and none of the real major apps have developed on here, which is why you're not going to get a lot of TVL right now. Although they have 1 billion still on the proof of stake chain. I presume that a lot of this, or the majority of this, is going to slowly make its way out to the zkEVM. zkEVM is, you know, just a better network to use for most people because you're not using the side chain there. And it's just going to take a while for the zkEVM to, you know, move forward and be a little bit more mature. But you can see the TVL is growing here, and I assume this is going to continue upwards. You can see the applications on the zkEVM. You know, it's, you know, Polygon applications, right? So the kind of proof of concept applications that you'll get on an early chain. Polygon proof of stake still has all of the kind of majors here, which I presume will move over. Polygon have just changed everything. They're moving from the Matic token. They're changing the ticker to POL or POL. No major difference there, but they are changing the tokenomics as well. What they're trying to do here is build out a total suite of technologies, not just the proof of stake chain. They've got the zkEVM, and then this idea of, I think it's called supernets that they call it, something that Avalanche have also developed as well, is basically the ability for any vendor just to come in and make their own permission chain. So they call it a supernet. It's essentially a permissioned blockchain, and there are many use cases for that. But, you know, those people can actually come to Polygon and say, look, we need a blockchain. We need to be in the system. We need to get this liquidity from Ethereum. We need the assets. We want to build this chain for this specific use, maybe an application-specific chain. Instead of having the cost of doing that themselves, they can just go to Polygon and say, spin one up for us. It's going to cost an X amount of money. And apparently all of these chains will eventually, through fees being paid and everything, work their way back into the Polygon token. So if you stake it, you can get some yield here. One of the downsides here that I've seen recently with the Polygon token is they have changed the structure of tokenomics. So what we can see here is that Polygon now is increasing the inflation of the token. So they're going to create a 2% inflation of the token each year for the next 10 years. So 1% is going towards validator rewards. So what you're going to be seeing here is 1% of the token supply. So there's 10 billion tokens. 1% of that every year is going to be created afresh and given out to validators. Validators take that. You can sell it if you want. You can keep it. If you're a staker, you'll get that. Ecosystem support is 1% as well. So in total, 2% inflation each year over 10 years. It's a lot of token incentives, but what they're trying to do here is instead of getting VC capital. So Polygon Labs is different from the Polygon blockchain, but Polygon Labs is obviously a private company, and Polygon Labs, maybe they get VC funding, so they get investment, they sell equity in that company develops infrastructure and develops applications. What Polygon are trying to do here is create more of that, but in public. So rather than the Polygon Labs building out stuff and having the incentives there in private, they want to actually incentivize capital formation in public. And the way they do that is through the public token. So they're getting 1% of supply each year, putting that towards ecosystem support. And so applications or other people that want to develop new stuff and obviously need funding, instead of going the VC route and doing it through Polygon Labs, they want to do this in public, and they're using the token to do that. So will it work out? Well, I think they have no other choice, because they have obviously a 7 billion valuation. They want to use that for development, right? So is 2% the end of the world? It's not the end of the world. Obviously, you'd prefer it not to be there. However, I think 2% inflation is fairly irrelevant if you have a ton of money developing stuff for the blockchain. Like if they can't grow more than 2% a year, it's a terrible investment anyway. So I think what they're trying to do is create an open source funding mechanism and capital markets mechanism to fund development. And they need to do that to stay relevant, because you have a lot of other chains with a lot of other VC money that's pouring in trying to compete with Polygon. One of the downsides of Polygon that I can see, according to this data anyway, and I have double checked this on other sites like Token Terminal, is that Polygon just don't earn enough in fees. You can see they earned $28,000 in the last week. That is just not enough money, and it's way less than the competition. Optimism is earning $78,000 a week. Arbitrum is earning $143,000 a week. Even GMX, which is one protocol on Arbitrum, is earning $183,000 a week. Ethereum is earning $6.2 million a week as of right now. Polygon is just not earning enough. It's not competitive. And I don't know what the reason is. Are they keeping fees low to incentivize more users? Will the zk EVM actually give them a higher yield in terms of what they charge and what they pay to Ethereum? I don't know, but they have to change this, because ultimately all of these networks are in competition. They're going to be valued more or less in the same way in terms of what the multiple is on what they earn or whatever. So ultimately, the amount of money that the network actually earns is important, and it just doesn't earn as much as others. And so that is something that I want to be aware, or I want to bring to your attention, is that it has to earn more money. Maybe the zk EVM can do that. Maybe as it grows with supernets, maybe they can pay more fees. But there is an issue here that it just doesn't earn as much. Maybe they have to increase the cost of transaction fees, or maybe the zk EVM will be a lot cheaper for them and actually increase their yield. Something has to change though, because it's just being overtaken by the networks, which are earning way more in fees. And so because they're earning more in fees, over the long term, that is actually important. That was the overview of all the networks though, but what is the investment case? Number one question I think to ask is, why on earth would you want to buy any of these networks when you can just buy Ethereum? Because all of this is just a funnel into Ethereum as a token and as a much stronger investment in your portfolio than anything else. Why invest in any of these? Because these are riskier, and some of these are going to fail, whereas Ethereum just seems to be mopping up all of the fees and a much more solid investment. Well, throughout a bull market, the only thing that you have to be aware of in investing in any of these tokens is, will they outperform Ethereum? If they don't outperform Ethereum, there's no point investing in them. Let's see what happened in the previous bull market. Did Polkadot outperform Ethereum? Yes, it did here. So the performance versus Ethereum is in red. The performance in dollars is in blue. So you can see there was an outperformance versus Ethereum during the bull market. However, during the bear market, the whole thing has just absolutely gone away, and Polkadot seems to be just continually losing value in Ethereum anyway. So obviously Ethereum is the better investment here. We can see Cardano in the last bull market, huge outperformance in both Ethereum and dollar terms. However, during the bear market, it's kind of given all of that back as well. So in bull markets, these smaller tokens do outperform, so they have a higher percentage return. But that's not really important. What is important is how much confidence can you have in putting money to work? Because what you have to do here is you have to time the market perfectly to essentially invest in the asset before it outperforms, wait for it to outperform, and then immediately sell it back into ETH. That is very, very high risk. And most people, I would say, could just forget about that and buy ETH. Let's have a look at Avalanche here. So another L1, huge outperformance in ETH and dollar terms. And it's given up most of that as well. Although if you look at the lows, maybe we have a low here. It is gaining some valuation in comparison to ETH. But again, you would have had to have timed it very well to get in low, sell high in ETH terms. Both in ETH and dollar terms, it seems to be falling off again. We have Solana here, massive outperformance in ETH and dollar terms, and it has given up most of that as well. Although again, if you look at the lows, potentially we are seeing higher lows here. But can they continue to grow, especially with Ethereum now having all of these layer 2 networks? The next stage of growth may be on these layer 2 networks, which ultimately benefits ETH, and you may not see that on the other alt L1s. If we look for BNB and Polygon here, these have actually done very well in ETH and dollar terms. Well, not so much in dollar terms, but in ETH terms, you can see BNB seems to be just making higher highs in ETH terms, or higher lows, I should say. It seems to be a fairly strong price action in ETH terms. But again, maybe you don't want to invest in BNB, kind of linked with Binance and uncertainty there. In Polygon, as we can see, it's actually performed very well in ETH terms. Seems to be a potential double bottom forming here, but a huge underperformance recently. So for most investors, is it worth it getting involved in all of these different projects, having to assume that a couple are going to outperform, most of them are either going to go nowhere or underperform? That may just be way too much work for most people, whereas ETH is just that singular one investment that people can just kind of put in as the store of value and settlement layer for all of what's happening on top. How about Arbitrum and Optimism specifically though? Because these really are just ETH. I see these really as high beta ETH, because Arbitrum's specific job is to earn as much ETH as it can. So the DAO is going to be full of ETH and everything's going to be ETH. And then Optimism, being an open source layer of ETH, is essentially just earning ETH as well, right? So both of these are high beta Ethereum. Now, neither of these has really massively had a massive spike like we saw with all the other alt L1s. If you look at the alt L1s, all of them have this 2021 outperformance, right? This huge kind of spike up where the alt L1 narrative took place. They all had this spike up. L2s haven't yet. So they've launched. They're in that kind of bear market phase where they just kind of go sideways for like 2-3 years. They haven't had that narrative push yet, which is why so many people are on this L2 trade, is because they're seeing this bull market risk-taking overperformance or outperformance of lower market cap coins, and they're saying, could it happen with Arbitrum and Optimism? I do believe that they are high beta ETH, so they're probably going to outperform in percentage terms in the bull market, and they're certainly going to underperform in the next bear market in dollar and ETH terms as well. That's just how beta operates. Again, it's up to the investor whether they want to take that extra risk and get that higher beta, or whether they think Ethereum is enough. That's up to the individual investor.